Hello everyone, thank you for joining me today. It's Monday, January 23rd, 2023. This is not financial advice. Please don't copy my trading strategies because you will lose money. This is only for educational purposes. Okay, so let's get into it. New high on the S&P for the year. Not for the last year, just for 2023. The reason why, I think, here's a couple of reasons. There are some analyst upgrades on some stocks. So that's one. Second one is it's a continuation from Friday, most likely. People are excited about earnings, and Netflix stock did very well. So I think it's just a continuation and some analyst upgrades. People are excited for earnings. So let's see what happened today. Right off the bat, we opened up higher and sold off, closed the gap, and from there never looked back up until about 1:30, 1:40 in the afternoon. And from here we sold off to a key level of 4,000-ish, 4,000, and it kind of wanted to stay here for a little bit. And when we went up to close at 4,019. So pretty bullish for the day. It was actually up, up 1.5%. And let's see what I did for the day. So on Mondays, like I mentioned before, I like to sell calls on my stocks that I already own, right? So some people call it the wheel strategy. You sell calls on the shares that you already own. So you can see here I sold Shop, PayPal, Roblox, Beyond Beef, Airbnb, and Meta. There's two SPX trades here. And as you could see, normally I do much better in SPX than I did today. So let me show you what happened. So we go back to the charts. You could see that we started off pretty bullish and just kept running. Here's what I was watching during the day. I was watching Apple because it's the number one stock in the S&P. It's weighted the most. Microsoft, Amazon, Berkshire, Google. So I watch these guys and I look at overall what the rest of the market is doing. Now here's the key component of that. We have the advanced decline line of the New York NYC, which is about 2,500 stocks, I believe, in the NYC. And as you could clearly see, they were selling off. However, Apple and Microsoft, even though Microsoft kind of consolidated here and went up, Apple never even consolidated, it just went straight up. So typically when I see that we have, one of these or two of these acting differently from the rest of the market, eventually they kind of come together and they start acting as one. So we had Amazon that kind of sold off too. Berkshire sold off. Let's see what Google did. Google kind of sold off, but then bounced back. So it was a mixed bag, and definitely Apple was a strong leader today. Microsoft was a strong leader. Rest of the market was not really playing along here up until here. And then after that, whatever, chain events happened here, it just took off and started following Apple. But usually what happens is if a lot of the market's selling off this hard, this fast, this stock, even though it's Apple and Microsoft, they start usually following the rest of the market. In this case, the market started following these two, and others obviously as well, but these are the ones that I'm looking at. So because of that, you could see that what I did two trades in the SPX. One was a call for 4,030, which, as you look at the chart, you could see that it went into the money right here and right here and stayed up there for quite a bit. And it was actually in the money for about $1,000. And again, I don't use stop losses, so it's not a very good, for a lot of people, that's what I say. It's not, you will lose money because this is not a good strategy for some people. For me, I watched it. I saw that it was going in the money. I saw it, that the fact that, I collected $90 and now that $90 turned into a negative 1,000. But I knew that I was going to be able to get out of it by rolling it up and out. And that would be my strategy had it not went back down. So again, I didn't have to do that. Obviously, it didn't. The market went down. It went out of the money, and at the end of the day, I ended up buying it back for $10. You can see right here, I bought it back for $10. Had I not, I would have lost. Had I been using a stop loss, I would have lost way more, and I would have collected nothing. So to me, the strategy works better. For others, it doesn't. So I didn't have to buy it back, but the market again started looking up like it was picking up steam again, and I just didn't want it to jump up here unexpectedly. It's not worth it. Might as well just buy it back. So on the flip side, in the put, if you remember, I had 2 open puts that were from prior week, and now they finally expired worthless. I didn't have to buy them back or anything, and I sold this one today. For this one, I believe I collected, I collected $100, and I did not have to do anything with it. It was, I tried to sell some other ones here, but the market was running up so fast, I didn't want to chase it. And with the advanced decline line looking like the way it did, I tried to stay kind of on the safe side because I already had 2 open here. They were close to the money, so I decided to just kind of play it safe. And the reason for that as well is because there's earnings coming up all this week. You never know what's going to happen. I'm in all cash today at night and hopefully tomorrow and the day after, and that's the whole point. I definitely don't want to keep anything overnight, especially leading up to earnings, because we can open up way down, we can open up way up. But for me, it won't matter because I'm in cash. So overall for today, wasn't the best day because I didn't collect that much premium on the SPX. But I did overall from all the calls, the sold calls I did, and the 2 puts, or the single put that I sold, I ended up with $722, which is not bad, but it's not great. So, but again, the most important part is that everything is in cash and we're ready to deploy the cash tomorrow on a new trade. So thanks for watching. Join me tomorrow. Please hit the like button, subscribe if you enjoy the content, and we'll see you tomorrow. Thanks.